Ladies and gentlemen, welcome back to the channel. All of my SoFi hodlers. SoFi is down about 6.73% heading into the end of the day, so it would not surprise me if AMC is down even more than that once we do close trading. Does not matter. We're going to go ahead and do this video right now. I have some real estate stuff I have to take care of, but nevertheless, this information is relevant from here until basically forever. This information is very relevant. And what I want to talk about is the new developments that we know are happening or we know that are coming, the big catalyst by the end of the week, and why I said in the last video that we are essentially at that level that you've experienced all of the pain already. People have crazy conspiracies like we're gonna fall to $2 or $3 or $5 again, or even $10 again, when that is factually not the truth. So let's get into this video. Hit that like button and subscribe to the channel if you guys have not already. Also, make sure to check out the pinned comment down below to join the trading community. And if you want to help support the channel, links down below in the description to get yourself some free stock. So I do want to point out, first and foremost, that AMC is down 7% right now, down to $15.40 per share, whereas GameStop is down 11%, down $12 at almost $99 per share. So AMC, even comparing the two, is doing much better. But why is AMC doing so good today? It's because their business is getting better. They are technically a recovery stock. They are recovering from the Rona. And as we do know, the Batman numbers were incredible, over $100 million at the box office. That is right behind Spider-Man, which was at about $120 million at the box office the first weekend that it was open. So it's clear that Batman is going to be a big box office movie, and there's a lot to be very excited about, like we do know what happened on the earnings call. A lot to be excited for. But the main difference is that AMC has a business behind it that is getting better and actually improving, rather than some other stocks and other companies that never really had businesses behind them. So if you have a business behind a stock, even if it's like AMC, a short squeeze trade, your lowest level is going to be that fundamental valuation. And the fundamental valuation is obviously sustained at $15 per share. That's what I meant in the last video by saying, hey, you have already felt that max pain. Even as we have had extreme fear in the markets, take a look back to when the SPY just recently, I mean just the other day, about a week ago, hit 410. This was a big move down, even bigger than that 6% round move we've seen in the markets, which this was a very historical day, January 24th. This day, we came all the way back down to 410 and then actually rebounded all the way back up to 428 by the end of the day. A lot of fear right there. What did AMC do? Virtually nothing on that day. Did the same thing, but we only came down to $15 per share. So the markets, they were acting very irrationally. So was, everything. All stocks were acting irrational, but AMC holds up support at $15 per share. Could we fall under 15 for a brief period? Sure, very possible. Now, are we going to fall under 15 and stay under 15 for an extended period of time? That is obviously a big fat no. That is not going to happen. Unless we get some kind of black swan event, which, if I were to just imagine some black swan events, it would be a nuclear weapon going off, a nuclear reactor going off, which the second one, nuclear reactor, that's more probable than a nuke going off. If Russia attacked or declared war on NATO, as well as, if we come out and ban all imports from Russia, whether that's oil or other things, that could also be a big event. Not really a black swan because we see that coming already, and that's partly what I want to go over right now. Unless we get one of those happening, then you're not going to go under 15 and stay under 15 for all too long. And I think that's very important for people to realize that you've already seen most of the pain that you are going to feel, at least in the midterm. The short term could go down a little bit, but you would likely just pop right back up above $15 per share. Like, if I were to forecast that out, being a weatherman for the stock market per se, that's what I would say is expect cloudiness, in the near term future, but, sunny days are ahead, right? Now, main gist of that. As far as the news that is coming out, Russia, everything, businesses, stocks, bonds, everything, the government was rated a CCC minus by S&P as well as Moody's today. And essentially what that means is that you can no longer invest in Russia at all. You can't buy bonds, you can't buy stocks, you can't buy treasuries, you can't buy nothing that comes from Russia. It's not investment grade. So if you're an institutional investor or a hedge fund, you simply cannot buy those kind of assets. I don't even like to call them assets because they're more like liabilities, because everybody that did own those lost their ass, lost 100% of their investments. That's why you're probably seeing the markets down so much today, and that's probably why you're starting to see some more margin calls that are happening. Look at the NASDAQ, down 3%. 3% on the NASDAQ, even considering AMC down 6-7%. Not too terrible, all things considered. But nevertheless, like I said, a lot of people are taking massive losses on that front as far as Russia is concerned. If you guys don't watch this channel all of the time, then you don't know why that is and why it's so big to be seeing basically anything Russian investment-wise become non-investment grade and non-investable, is because Russia was a very prime place, a very good place to invest in before this invasion. They have historically one of the lowest debt to GDPs out of any country. Russia is very not very much not indebted, right? America 140% debt to GDP. Japan 236% debt to GDP. Russia in between 13 and 18%, depending on where you look and who you ask. So in that sense, there was a very low risk of default. Now that is completely changed. And you can see the margin debt for January was at $829 billion. This is likely a lot of retail investors that, you know, you have seen the margin debt go from 935 billion to 829 billion. Probably a lot of retail investors that did get squeezed out of their margin portfolios and had to cover on that margin debt. At the same time, institutional investors, they are going to be feeling the pinch now that everything is getting clapped over in Russia. All of their investments have essentially went to zero. You even see big banks like Citigroup with a market cap of $100 billion, said their total exposure to Russia is $10 billion. That's 10% of their total market cap. Not good. No bueno. So even banks are feeling the pinch here, and this is where we do start to get primed for the MOAS as far as AMC is concerned, because when you take all of this together, when you're starting to see banks, institutions, and hedge funds getting margin called, the only thing that forces or stops them, I should say, from covering on their AMC short positions is the fact that AMC is not going up. If we get some good news and we push AMC up, then you will see shorts be forced to cover because they will not have that extra money to service their margin calls. Let me repeat yet again for everybody that does not know this. Margin calls do not mean shorts covering. Once you get a margin call, you have 2 to 3 days to deposit money into your brokerage account. If you do not deposit money into that account within that set amount of time, then you get liquidated on your positions. You need to see, hey, margin calls come in, AMC starts to rally. Shorts, I don't got it, bank. I don't got it, Mr. Bank. So then they go and cover on that position, that short position like AMC. And then they get that collateral back, whatever is remaining after the banks did forcefully liquidate them. So hopefully crash course on margin calls don't mean anything. You know, liquidations, for share liquidations, that's the main key here. But let's get into some of the other information that you need to know. A side note here, I think this is pretty encouraging and pretty cool to see. You're actually seeing the first foreign fighters going to Ukraine from US, UK, Sweden, Lithuania, Mexico, and India. Kind of cool. They've had over 100,000 people sign up for this, so we'll see how many actually make their way over there. I looked at this picture a couple times, and I didn't see anything too crazy. Look at this guy in the back. What the hell is going on there? He's just smirking. He's like a gray face, blue face over there. Blue face baby. Okay. Other than that, let's get into AMC data that you guys need to know. So the short interest of free flow is 20.86%. Current shares that are sold short of 107.39 million. Cost bar max of 2.73%, and the utilization is at 100%. Manipulation, I call manipulation on that. I don't know why the cost to borrow max is not going up when clearly it should be. Days cover is sitting at 2.0 0.51, so it's also very hard for shorts to get out of their short positions. And yeah, the market is taking another move down actually at the lows of the day right now. Jeez, it's not looking so good. Other than that, the option activity, this is pretty interesting. Positive order value of 56%, so we're more positive than negative for the day, with 35 orders totaling $7.84 million over the past week, 123 orders totaling $57.4 million, positive order value of about 36%. So very, very interesting as far as that is concerned. The max pain heading into next week, or this week, is going to be, drum roll please, $18 per share. That is where the most option buyers feel the most pain, where the most option sellers get to keep their money. As we know, options, about 83% of them do expire worthless as is, so pretty important to know there. As far as the option activity, nothing too crazy for this week, but next week you have about 7,000 calls that are in the money, 308,000 calls that are out of the money, 74,000 puts that are in the money, and 61,000 puts that are out of the money. If we do see a move to the upside, that's a lot of puts that will run out of the money. That's a lot of de-hedging, aka buying shares on the open market the market makers will have to do. And on top of that, a very low amount of calls that are in the money comparatively to calls that are out of the money. So that could be very, very bullish. Now, as far as AMC is concerned and the technicals are concerned, $15 per share is that key level. I think you're going to see a lot of demand under $15 per share, even by market makers that think, hey, this is a fair value. I'm going to pick up some shares under $15 per share. So I really think that is your worst case scenario. And I think we're pretty much already there, right? We're at $15.36 per share. If we do see a black swan catalyst, then we could fall under that, but we're not going to stay under that for all too long. The MACD is I can't even tell. It looks to be pretty neutral. It's not bullish, it's not bearish. It is right converged with the blue signal line, and the CCC line being above the blue signal line is bullish. When this yellow line is below the blue line, that is bearish, like you see right here. So surprisingly, it is not bearish yet. We'll just have to wait and see tomorrow. That will give us the full confirmation of, are we going bearish, are we going bullish? As far as the RSI, that is at 38.41, so signaling we are starting to go on the oversold side. The moving averages here, the 20-day simple moving average is at about $17.76 or 73 cents per share. So watch that level. You're going to see a lot of resistance around that. It was a solid support for a while, so things could flip on a drop of a dime without too much notice. So I will definitely be watching that to see what does happen. Jen Psaki is actually live right now as well, and it looks like she is saying some things that are certainly moving the market. So keep in mind, Jen Psaki, she's going to definitely move the markets around quite a lot. So says Biden already taking steps to address surging gas prices. Says we will open more ad opportunities for the Athletic NYT. So pretty interesting right here. If you guys want to stay up to date with a lot of the news when it comes out, fast stock market news on Twitter. That is your way to do that. You can see even Short the VIX, the Masked Investor, follows them as well. So definitely check all that out if you guys want to be a part of it. Get yourself some free stocks, links down below in the description, as well as sign up for the trading community. We have been hitting a lot of great trades over there. Even that BP trade that I called out here on the channel in a couple videos, that is up about 25% today and likely to go higher on Tuesday, when we are going to get a vote to ban the Russian imports of oil. So that is going to be all. Thank you guys for watching, and I will see you in the next one.